What's going on, Dividend Chasers? It's the Dividend Bloodhound here with another investing episode. In this episode, we're going to talk about 6 stock market news items that you need to know based on what's going to happen in the market this week. And I think we've got a turbulent week ahead. The eagle-eyed amongst you may have noticed that I've had a little haircut since the last video that I sent out. That's thanks to my lovely girlfriend learning how to cut hair on YouTube and applying it to me, and I think she's done a pretty good job, don't you think? Anyway, back to the video. I've got 6 items that I want to get across to you, and I'll get into them shortly. But firstly, if this content brings you some value, please hit that like button in the corner there. And if you're brand new here, I'm the Dividend Bloodhound, and it'd be absolutely fantastic if you could hit that subscribe button in the corner and even tick that notification bell to get notified of future content just like this. That being said, roll the intro. Hello again, guys. Without further ado, we're going to get straight into these news items that are going to hit the market this week that could cause some turbulence. They are macro events, so they'll probably affect the whole market a little bit more, some sectors a little bit more than others, but I think this as a whole will trigger some sort of turbulence. But a lot of analysts at the moment are referring to the market as like a kangaroo market, so the bull market and the bear market, it's really sort of out the window at the moment because the market is kind of trading sideways and it doesn't really know what it wants to do. You can't really tell at the moment whether we're going to go on a bull run and we're going to continue going upwards, or whether we're going downwards on a bear run. We're somewhere in the middle at the moment, where some weeks it's massively up, some weeks it's down, and then others it kind of just meanders around in the middle. Anyway, there's 6 items that I've got for you in the news that are on Market Watch and Seeking Alpha. You can see them on, and Yahoo Finance will also back this up as well. Them are the places where I've seen these pieces of information. So it won't have escaped your notice that the health crisis is still a big player in the macro environment at the moment. Across the world, countries are still struggling, but what there has been is a massive uptick in cases over in the US, and that is a really important. We're coming up to an election. The countries and individual states were just starting to come out of lockdown and starting to ease their restrictions, and then as soon as they've done that, there's been a huge uptick in cases again. I saw on the news that there's over 2.5 million active cases in the US at the moment, which is obviously very bad for people's health, and the amount of people that could possibly pass away from that is also extremely bad. And my heart goes out to anybody that is affected by that. And there was something like 50,000 new cases on Friday while we have a little wait over the weekend to see how it's going to react on Monday morning. But the trend is definitely on the up again, and that could really spook investors. That's number 1. Number 2 is there is a jobs report coming out over in the US on Thursday about how many people are unemployed again. And how many people have lost their jobs in the last month, and realistically nobody is expecting that to be good news at the moment. It's just too early on, and with cases going up again, there can only be one thing really, and that is that there's going to be more people out of work again, which is obviously very bad for the economy. The third thing is that there is a quarter end and a monthly end portfolio rebalance taking place by pensions and mutual funds, and these funds are likely to, based on news that is happening at the moment, they're likely to shift to safer havens at the moment and put their money into safer places such as gold, silver, bonds, that sort of thing, because of the volatility that's in the market at the moment. And the quarter end, or the end of the month, is a perfect excuse and an opportunity to do so. So that could also cause a pretty big sell-off. Fourth, the stimulus package that was going through the House from the Democrat side of things has stalled basically, and it's hit some resistance. And there's a lot of political rigmarole that's got to happen now to try and get that through and into law, and to end up on the White House desk and ultimately to be signed off by President Trump, obviously, who's also, and that leads me nicely on to number 5, which is The polls at the moment in the US suggest that Joe Biden, a presidential candidate, leads in the polls, and Trump is having his own issues in getting his campaign rally out there because of the health crisis, because of numerous other things. This is going to affect the markets based on how people are going to try and judge this over the next couple of months coming up to the election. We're really going to see people getting a bit jittery about keeping what they've got, selling off, and when you factor that in with everything else that's going on at the moment, this could make for quite a volatile few months. I mean, that might not affect this week so much, but it's definitely a news item that I noticed, and it's going to continue to be around for quite a while. I think the US presidential election is going to weigh heavily on the market until it's all over again. But then you could see a massive rise afterwards, especially if the health crisis is it's not going to go away, but if it seems more under control by then, you could certainly see a really good increase to the market after that. But obviously that is some time away. And then lastly, number 6, I'm going to take it to the UK. And a news item that I saw in the UK is that Boris Johnson has announced that there's going to be a huge infrastructure spend coming over the next couple of years, which will obviously need to go into the budget and it will need to be paid for. But that is seriously an attempt to boost the economy. There's no way of it not being that. The economy is in such dire straits at the moment that infrastructure spending is a really good way for governments to sort of spend and build their way out of it, so to speak. And that is including infrastructure projects such as schools, hospitals, HS2 that you've got coming along, which is the railway line from initially high-speed railway line initially from London to Birmingham, but then it's supposed to split off and it's supposed to go on to Manchester and go on to Leeds and then go on to connect up there, and that's supposed to massively decrease travel times between the biggest cities in the UK and the capital, London, of course. So that is where I'm at and what I'm thinking at the moment. So it could be quite a volatile week, depending on how these news stories play out. It is going to be very difficult to see where this one goes. If you're a dollar cost averager, you're going to be buying irrespective, but there could be some really good dips for you to buy this week, I would think. And if you've got a lump sum, maybe just sit on the fence a little bit and wait and see how this one plays out. Of course, don't time the market. That is not how I would say. It'd be better off to split your money out and invest it that way over a time period, in my opinion. But this week seems particularly turbulent, if you ask me, based on what I've just said. So be careful with your money. I'm not going to tell you to or not to invest, because you need to do your own research and have a look. This is just my opinion based on the news stories that we're in for quite a bumpy week ahead. I've got a small amount of money that I'll be depositing into my brokerage account over the next week or so. And I'm going to split that out over stocks as well, literally like I've just said, a little bit at a time and drip feeding, and wait and see how these news stories play out. Anyway, that being said, that wraps us all up for this video. There's only one more thing for me to say, and that's a massive thank you for watching. If you haven't already, please like the video, and because that will help the YouTube algorithm out and it'll help get this video out to even more people, and it'll help grow this channel, which is what this is all about, helping even more people. And of course, if you haven't subscribed already, please do so now, and also hit that notification bell so you get more notifications about content like this. That being said, it's been a pleasure to bring you this video, and I'll catch you in the next one. Goodbye.